Welcome to the Private Lender Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, Chris Haddon and Jason Balin here with the Private Lenders Podcast, as always sponsored by our mastermind group for private and hard money lenders, hardmoneymastermind.com. Go check it out, create a free account, see what everyone is discussing, talking about, learning. Today we have a mastermind member. We have Greg Whitaker from the greater Nashville area. He's agreed to come on. He has a few questions for us. We've been chatting back and forth a little bit on email. Thought it would be a good idea to have Greg come on the podcast, and yeah, we can do it live, see if we can help you out. Greg, thanks for being on.
Thank you. Really, my focus right now is to kind of have two things going at the same time. Number one, build the infrastructure to be a lender. I've got my own capital. I understand that piece of the business. But in the meantime, I'd like to be able to be a small capital investor for an existing lender. So that was my main question is, okay, I've got a few people locally that have been lending in the space for a number of years. That have solid reputations in the business. They're hard money bankers. I don't know what their capital pool is. I haven't had that conversation yet, but I'm trying to get around them, the emails, just reaching out, that type of thing. And I'd like to get that going at the same time so I can do a little bit of both. So I feel like I'm involved at some level. I don't mind getting a little bit of an interest check every month, every quarter. But in the meantime, I'm definitely going to be out looking for borrowers, building those relationships, and just keep the machine moving.
Okay. Yeah. So just so I understand the question, you are considering investing your funds in another lending company's loans, and
Yes.
and you're curious to learn more about how to underwrite the company, the deals, like to make sure you're getting into something good. Does that sound about right?
Yeah. Basically, like if I'm approaching them and saying, I'd like to invest capital, how do I vet them?
Okay.
Is really my main question.
Yeah. Very good question. Have you spoken to these lenders yet? Have you had communication with them so far?
One locally at an investment meeting of like an hour and a half, just a very brief conversation. He asked me, what kind of annual return are you looking for? Gave me his card. Gave me just a basic overview, and he said, email my guy. We'll send you an onboarding package for compliance. That was like yesterday. Okay. I'll follow up with that one. And then another one is a guy that I haven't been able to actually even have an email conversation with. He's the one I'm really wanting to lean toward because he's truly local. He lends in this area. He underwrites everything. I just don't know anything about where he gets his capital and that type of thing. So.
Gotcha. I know you want to jump in first, Jay. I know I have a few questions. I know we're going to fire through some quick questions.
So exactly. So a few things. Is your main reasoning to do this is to learn kind of while your money is deployed, like as a learning thing, or is that kind of the business model of you want to kind of deploy and get a 10% interest rate of return instead of lending those funds out to get a higher interest rate of return as as it kind of ramps up? Or do you kind of just want to do both kind of side by side?
Kind of side by side. I mean, I could put a small bit of capital into a company if they don't need someone that's accredited. The annual income for that's a little steep for me. Last time I checked, it was like $200K for 2 years running. I don't come close to that. But I do have the ability to put some skin in the game on the capital side. Not a big fish, but if I can have that just going in the background, then I can focus on building my lending piece.
Sure. Yeah. I mean, It's an interesting question, and it's I believe Chris and I kind of know how we would do it personally, even though I can't say we've chatted with people about this in the past. But like if we were looking to deploy our own capital into other investment funds, a few things to think through. Number one, what type of capital are they using? Are they using their own money? Are they using other private capital investors' money? If they're using like institutional capital and bank money, they're not going to be the right partner for you. Ideally, you want someone who's smaller, I would say kind of sub $40-50 million, kind of they're using all private capital, they're using all their own money, and they're making all the kind of in-house decisions, right? And that's going to weed out a lot of people. Most capital most hard money lending companies these days are using institutional backed capital. And until you kind of dig in, that might not jump out at you. So, the easiest thing is say, hey, what types of deals do you do? You want somebody to be local. I don't think it makes sense for you to invest in a deal in California just to be involved in their fund. I think since you want to be active in the future, you might as well have somebody localized that you can invest with, potentially learn from, potentially partner with. I would also kind of throw out there that and I don't know if they're going to be open to this or not, but potentially it's one of those things that's like, hey, I'm willing to invest with you guys. Can you put up some money and I can put up some money and we'll kind of co-invest and co-lend together in these particular deals. I'm trying to think on both sides, like if I was approached that question or if I invested in someone else in other funds. So obviously, Chris and I have, good bit of our own money in our own deals, but when we use our self-directed IRA funds, we can't lend through Hard Money Bankers. So we have self-directed IRA accounts and we have other lending companies that we know that we invest those through, right? Just like a capital investor would invest their self-directed IRA funds with us. And some of the things that we look for is, do they have their own funds in the deal? What types of deals are they doing? Are they deals that would meet kind of our mold? And do they have their own personal funds in those deals as well? So I think those are a few kind of things to think through.
Yeah, a couple other things I would jump in with, just kind of some, building the relationship and everything else and like getting to know what that lender is all about. Like, first of all, I would definitely disclose that you're looking to do loans on your own, in addition to investing with other lending companies. I would be upfront about that. Make sure they don't feel some type of weird way, like, all right, our competition, like we're training our competition sort of thing, which is a legitimate thought for them to have, you have some money with them and then like you pop up as like advertising in greater Nashville area for private money, that sort of thing. So just be upfront about that, right? And in all likelihood, it'll be fine. They won't have an issue with it. So yeah, some of the deal logistics, in your position, I would want to be in a deal that's being like fractionalized or, a co-lending arrangement, direct placement, the kind of deals that we do and the terms that we use for that. It's not going to do you a whole lot of good. I mean, it would be fine to be in a fund in terms of interest rate return, but you wouldn't be able to see deal to deal. And I think you want to be able to see deal to deal just as part of the learning process and security and everything else. So once like you get the basics out of the way, like maybe you know these questions already. Do you know what kind of note rate the two lenders that you mentioned are lending at?
Yeah, I had a quick convo with the gentleman at the investment meeting. He said we pay 9 to our investors. Okay. So he's hard money. So he's probably like 13 plus.
Good. Okay.
At
that's
least.
About right.
Yeah.
That's about right. About what I would expect. 9 or 10
they're
paying. That's fine. Nothing wrong with that. Also, I don't think a fund's a good idea, but the accredited part, I bet you'd be, just having $1 million liquid to do this kind of lending, you'd probably qualify, if not on the income side, you'd qualify on the asset side as accredited. Probably neither here nor there because the fund's not really what we're looking to do. So I would, the fact that they have an onboarding packet is a good sign that one particular lender, they're paying about the right amount, and that you would be able to underwrite and approve, in essence, deal to deal. Like, okay, I'm going to take half of this $200,000 loan, so I'm putting $100K into it, and you get to see everything about the borrower, about the valuation of the property, insurance, title, all the stuff, right? And make sure that they're doing a full underwrite, that they're checking all the boxes, like they're pulling credit, there's insurance on the property, there's a valuation of some sort that makes sense, entity documents, maybe, the normal stuff, right? In all likelihood, there is. If somebody is a full-time lender, this is what they do. They're probably going to document that file, right? It's a lot of the one-off, like meet them at the meetup group kind of private lending out of self-directed IRA people that I see doing not the majority of the right stuff in terms of underwriting. Like they'll, like a smaller shop will be like, oh yeah, I lent this guy, it was $150,000 acquisition. I gave him $150,000. He's going to do construction out of pocket. Okay, bad underwrite, right? That's 100 loan to cost, 100 loan to value. Or like, yeah, he said it was worth 250,000. I'm like, who said? Well, the borrower, he gave me a valuation. Okay, you can't get a valuation from a borrower. You know, like just make sure it's not that kind of operation, which it sounds like it's probably not. They're probably a pro company. They know what they're doing. They have a lot of other people's money and their own, and they do it right.
The one thing that I will say is the gentleman that I spoke to, that he's a member of a large investment community here for, you know, like 25 years. So the credibility part is there. But the one thing that he did say, and I really thought a lot about what you guys have been teaching me, and I was straightforward about my lending possibilities to other people. He didn't have a problem with that. He did say this, and it made me think exactly what you just said. He said, you can't pick the state that your deal is deployed in, and you can't pick the property. It gets spread out over 40 states. And I'm like, I'm okay networking around this gentleman, learning from him if I can, but I'm not interested in investing into that fund.
No,
I want that local guy. He's actually down near Franklin. I'll just say in that general area. I just haven't had the opportunity to get closer to him to even have a coffee, an email, or whatever. But I'm a very patient man, because in the meantime, I'm working on building my little pipeline. And I already know, based on what you guys have taught me about looking at it, and B, being on this side for so many years, I already know what my maximum loan amount is going to be, what the rehab costs are going to be, based on a basic formula that this gentleman showed us at that meeting. He knows how to go in while walking through a property, talking to an agent or a seller, and quickly come up with a rough number on what rehab costs are. So I looked at that chart and I just did the simple math while he was talking on my phone. And I said, I already know I'm not going to lend any more than about $100,000 to a fella. And the most rehab is going to be about 25K, right? Let's assume the ARV is where it needs to be. And I'm at like 65 LTV like you guys. I'm totally on board with that. But him showing me that, I already know who my first borrower is going to be. And I'm not going to go and stretch in any way just so I can get a deal. And what you said is great, because it's like, you know, you're going to put some of your own money into a company. Don't just be putting it in there just to be putting it in there. So I'm willing to wait for that local guy. And I'm hoping, and here's what I'm thinking, guys. Tell me if I'm crazy. I'm like, they don't advertise on their website that they take people's capital, or that they, you know what I mean? And maybe they're full, because there's, like you said, there's so much money out there right now. Maybe they're just full. They don't need it, you know, and I get that.
And a lot of them are like that. The guy that you just described, he's lending in 40 states. He probably has a fund. He probably has institutional backing. Or he's got some sort of like mix and match kind of between that. I mean, I don't personally know of any, you know, hard money lenders in the Nashville area, but I'm sure there's some. I mean, they're everywhere. You know,
the guy that you mentioned that you would ideally want to lend with, what's his name or his company's name? I just want to look him up.
Sure, it's mcl-pl.com.
Okay.
Neil Lampley. He appears to be an absolutely forthright gentleman in this space. He's about my age, early 50s. According to his bio, he underwrites everything there. I did email his ops manager. Neil was out for a week, but he was CC'd in the email. So I waited a week, followed up, haven't heard back. So I'll just keep tapping on his door once a week. And eventually he'll either get tired of me emailing me, or go, okay, I need to at least talk to this guy for a couple seconds and just chat with him. You know, hey, we're not looking for any capital. That would be perfectly cool. And I'll just keep moving forward, you know?
It's very possible that's the case. He'll still take your call, though. I don't see why he wouldn't. I would just, you know, call him up, see if you can get on the phone. I'm looking at his site now. Seems like a legit outfit.
Yeah. And, you know, based on what you guys have taught me, it's really cool, because I've been processing back office for 20 plus years in the business. I don't underwrite personally. It's been a long time since I've actually underwritten. They used to let us underwrite like pure vanilla, 80 LTV or less, W-2 only, back before the 08 mess. I get that, but it's been a while. So I know what muscle needs to be built for me, but I'm looking at the whole picture and seeing it like from the wide angle. And the amount of information that you guys give is insane, obviously. I'm not going to, you already know that, but it's like, I'm looking at myself and saying, you know, you're like way ahead of the curve, I think, than the average bear. But then I ask myself, why would anybody not in the money business want to get into this business? So it's like I'm making assumptions. Do all the people that want to move into this space at my level, are they coming from the lending business or the real estate business or the flipping business, or are they like in healthcare and then they have to learn everything? You know what I mean?
Yeah. You want to jump in on that?
Yeah. I mean, it's a whole mix and match. It's a whole mix and match. I mean, keep in mind, there's a lot of folks that have capital. They just want to learn how to deploy it responsibly. Some don't have access to capital. They're trying to, learn how to raise capital to do it.
Yeah.
There's no right or wrong. Some want to grow a gigantic company. Some just want to keep it small or do a deal, deal here and there. But a lot of people do have some sort of real estate background. I mean, from what we've learned, just with private lenders, is a lot of folks have owned rental properties. They've owned commercial real estate. They fix and flip houses, and they get to a point in their life where they've accumulated money and capital. And they're like, I don't want to deal with the headaches. I'd rather take a smaller rate of return and just invest it passively through a company, or just invest it or lend it out to skilled operators.
Yeah. I mean, a couple of answers on that. Like, one, it is definitely common for the people that Jason mentioned, also for real estate investors who own assets and they have income properties. They've done a lot of flips, and maybe they just want to make a decent rate of return and not have to do that much hustle and work that goes into all those projects. Right. And then the other thing I wanted to say is that, like, based on what I've heard so far, is like, you're ready to do your own loans. There's nothing wrong with investing through other people who have opportunities. You can earn a rate of return and see behind the scenes, behind the curtain, how they do it. But you appear to be very ready to do your own loan. You just need to start getting the calls, start getting the lead flow. You said you're building the email database and, put out the messages that people want to hear. Here's what we're up to as our lending company, the areas we're looking at, the deal types, and get some calls, quote some deals. But I think otherwise you're ready, and it'll come together when it needs to. Like you'll properly paper a file when you have one to fund in 2 weeks. It doesn't happen before you have one to fund.
Yeah.
Right.
And I like what you guys said about, number one, I'm still listening to the audiobook on your whiteboard work. That's, at first I was like, I'm not I just kept on listening. And then it really started pouring in. I think I'm maybe halfway through it. The whole part about just conceptualizing the idea. I got through school basically by remembering what I saw on the chalkboard and in the physical textbook. So I'm definitely going to be buying a whiteboard just when things are floating around so I can see them. So I really appreciate that.
Absolutely.
I think to your listeners,
we have been here. We have multiple in every room.
Yeah. Oh, wow. So wow. That's good. They're like giant Post-it notes, and you can just erase them and start over.
Mm-hmm.
That's right.
But the other thing about the whiteboard audio that I'm listening to, and I'm hoping I'm not switching gears here too much, is I'm in the spot right now where you said, look, you need to understand what your strength and your wheelhouse is. That is me processing that file from front to back, vetting that borrower, getting that loan ready to go to the closing table, and wiring that money. I do that professionally. So I'm not looking to reinvent the wheel. And you guys help to really just say, you're heading in the correct direction here, sir. So I'm just, pushing forward, and I really appreciate that a lot.
Excellent. And here's another thing. I mean, potentially, and there's, I don't know if you have a friend, a partner, a colleague that potentially can be like, hey, listen, I'm great at this back office stuff. I have capital that I can deploy in these deals. Maybe they can help you find opportunities. Maybe they can do some of the sales,
good idea.
Sales jobs, the origination, stuff like that, just to get people in the door for a commission. I mean, probably, wouldn't usually kind of recommend somebody, just go out and get a sales guy. You shouldn't pay them a salary, but maybe a commission of like, hey, help me find deals, help me communicate with the borrower so I can concentrate what I like doing and what I'm good at on the back end. So that's another.
I like that idea a lot. Yeah. Like hooking up with some of the people from the meetup groups you've been going to, or just, started going to again. That's a great idea. Get some referral sources, be like, hey, I can throw some compensation your way for whatever you bring in, and add that to the mix.
That's where I'm at. And the other part that you guys are talking about in the audiobook right now, or your narrator, by the way, I'm a kind of a hobbyist voiceover guy, is the buckets. It's the buckets. And I get that. I bought a book on accounting, but it was geared to real estate investors. And it was unlike any other book like it that I had ever seen before. I read it in half of a day, maybe. And it's exactly what you describe about the buckets. He's like, you need to be setting up like 3 to 5 bank accounts with the same bank. And he explains, like the escrow fund, the checking account. And I get that, but I've never actually done it. So when I set up my LLC, I'm like 1 checking and 1 savings to start. And then in my personal account, I said, I'm setting up a 3rd account. I take my taxes and insurance because my house is paid for. And every time I get paid, I dump 1/12 of it in there. At the end of the year, it's sitting there. So I'm practicing that piece. So the stuff you guys are teaching is absolutely insane. And I look at your views and stuff, and I'm like, I cannot believe that this YouTube channel, and I get it, why it's there. It's to be present in that space. And I'm like, why isn't this channel and I don't mean you have an audience and you're selling them stuff. It's just like 15 views sometimes, maybe 150. I get it. But you guys have been in this space a really long time, and you said something that really caught my attention. You said, Greg, parenthetically, you said, Greg, 95% of the people in this space do not do social media. I am all over that, gentlemen, all over that. I mean, it's just waiting for you to have just that little bit of edge or leverage, if you want to call it that. And that's a powerful thing. It really is.
I appreciate all those words. Like, that is great feedback from somebody who's really been clearly paying attention to what we put out there. So I totally appreciate that. And I mean, I think we've been getting some momentum in people like yourself who really are going to use and implement the information, right? Like, and the whole mastermind thing for us that we've been saying since the beginning is like, we might as well make this mastermind so we can put this knowledge out to other people, because we're going to be talking about it anyway. The stuff that we talk about on the podcast or in the mastermind group is what we talk about in the office anyway, right? And so obviously, like, our bread and butter is lending money. That's what we do day in, day out. And that's, where it all happens. And the mastermind is very much like a passion project, right? And something that we just do because we really like to. Same with the podcast. And the whole thing's just very niche. Like, very few people out there in the community are ever going to borrow hard money. Even fewer are ever going to lend money, right? It's just a very, very niche kind of business. And so when it does resonate with, it's not going to resonate with as many people as, say, real estate investing is. Obviously, that's a hot topic. But when people like yourself who really get a lot of value from the information we put out, that's the goal. Right. So we appreciate you coming on. We appreciate you saying that.
And it's fun to see what other real estate lenders, hard money lenders, private lenders are doing throughout the country in different markets. I mean, we're stuck kind of in our area that we like. And I strongly believe that most hard money lenders and private lenders should lend where they know their home base, where they have where they have resources. I mean, I would never go flip a house in California, or I wouldn't lend in California. I don't know the area, and I'm not looking to learn. Could you move to another area? Absolutely. If you wanted to. Could you concentrate? But we have a lot of resources here, and we have a platform locally to do deals. And I think you'll, as time goes by, you'll build that platform yourself. I would just say, meet as many people as possible. Make sure you're raising your hand. Hey, I've got capital to lend. Send me your deals. Send me your opportunity. I'd love to chat with you. See if there's a creative way to make it work. And the numbers typically, it's a numbers game, right? 1 out of 10 or 9 out of 10 aren't going to be anything just right off the bat. But you get enough swings at bat, you're going to eventually, hit one. And that's kind of the game. I mean, our focus locally for our business, mine and Chris's focus, and then we have 3 other partners that run different office geographically, very, very close to here. But kind of little subsections, is just marketing. Like 95% of their days are marketing. 60% of our days are marketing. We have operational stuff and other transactional stuff that we do as well, but they're kind of just sales offices. It's just marketing. It's finding good deals, finding good opportunities over and over and over and over and over and over. And it does take time to do it. I'm not going to lie to anybody, but that's the game. You could not devote time to it and you can still get deals, but they're just not going to be as good of deals as if you're spending more time on it. That's where it comes to. I know for a fact that the deals that we do internally are better than our competition's deals because we're doing more marketing and our outreach is better than them. So our average deal in our portfolio is just cleaner and it's better. And I think going into where we're at now in the market, where most areas of the country is at an all-time high, and who knows what direction that's going to go in, it's better now than it, you got to make sure you're doing good deals and good opportunities. Now, obviously, you don't want to talk yourself out of doing a good opportunity, right? And I know, going into this without having done many deals, you might say, well, I don't know if I should do this deal. It might not be strong enough. And it could be a very, very strong deal. But listen, if you have a borrower with good credit, they have a good amount of their own capital, they're willing to contribute into the deal, they have some experience, chances are it's probably a good opportunity, or at least a good opportunity to kind of take to the next level.
The one thing that I really appreciate you guys talking about is this institutional money comes in, and I understand you describe that 80s 90s mentality in your book, and I get it. You guys see that wide angle. They come in, they dump a lot of money into the market. They're looking to keep their shareholders happy. God love them. But in the end, we're stuck with the mess. And right now, the mess where I live is a giantly inflated market. And I know you guys know that. But what I also appreciate you saying openly and candidly is the smart people in this space, you just need to wait until all that is over with. And it's going to settle. And when it does, you need to be there for your borrowers and for your flippers and for your rehabbers, because they're going to need you. I really value that type of information. And the way you guys, it's just like, here's the blueprint of how we built this thing.
Sure.
I'm laying it out in front of you. I mean, and the other, to piggyback on that, what do you guys think? I've really been thinking about this a lot. Where do you see this thing going? I'm not asking you to make a prediction. I know house prices are capped by only one thing, and that's the size of people's paychecks. I don't care what Wall Street or institutional money does. People can only afford so much house.
Sure.
Where do you guys see this thing ending on the crazy high end? I mean,
like
it's almost madness.
Market wise, I mean, we thought it's been crazy high for the last 7 years. So who knows? I mean, you drive yourself crazy trying to think about it, right? Because like 2 years ago when COVID hit, you're like, oh, this is it. This is the sign. Things are going to start turning around. And then things have doubled since then in a lot, in a lot of markets.
Craziness.
So the way that we look at things, like our perspective on both of this, on these is no matter what market you're in, it's a good time to buy. It's a good time to sell. It's a good time to lend. It's a good time to rent at the right numbers. So today, let's say, whatever, at 123 Main Street comes by our desk today. And we're like, you know what, we're willing to lend $100,000 on this asset today to this borrower. Well, tomorrow we might only be willing to lend 90, or maybe we'll be willing to lend 110. So we're just going to take the data and past experience and where we think we are in the marketplace, and we're going to lend what we believe is a good number today. We're going to make sure the borrower is qualified, has good skin in the deal. And I don't want to say hope, because that's not the right answer, but we're going to make what we believe is a smart decision on that particular deal. And there's houses that we've lent, twice 2x of what we did 10 years ago, because it's been a market that's increased. It's increased. And, but again, we lend $100,000 today. Similar scenario comes by our desk tomorrow. We re-underwrite it as a new day, as a new asset, as a new transaction, and we lend what we believe is a safe investment at that time.
Yeah. In addition, I mean, obviously none of us can predict this, what's going to happen with the market. There's interesting things that you can look at, like what you said, people can only afford X amount. At some point, like that debt to income ratio, what they can legitimately afford, not only qualify for, but afford, is going to cap out. But I mean, at the same time, like those numbers still surprise you, like what people are willing to pay even. In addition, there's still a supply and demand issue. There's a lot of buyer demand, and supply is short from existing sales and from new home construction. And so that is going to tell you that things are going to keep creeping up, even as long-term mortgage rates creep up. So, I mean, a few different things at work. It's got, every market caps out at some point. Every market flattens, dips, like when, how much, who knows? I have seen a lot of news articles pop up recently that this indicator is saying that, things are going to cool off or dip, or this expert saying the same. You really never know. I mean, like Jason said, real estate prices in a lot of markets doubled during a pandemic. Who predicts that? Who could have expected that sort of thing? So very good question. It's going to be fun to watch, and we're going to be there, and to echo what you said before, we're ready when things shake up and some of the institutional money gets scared, or maybe just their returns diminish because short-term rates are rising, and that's where their money is sourced. So when some of that capital competing with us pulls back from the market, we're going to be ready. You're going to be ready, and we're going to pick up a lot of good deals for a lot of good clients and keep it moving. That's the plan.
Yeah. I mean, Zillow's in bankruptcy right now, and I'm not saying anything negative about them. They had a model, they ran it, and I get that. But I like the fact that you teach people this is the long game. No matter where it's at, high, low, middle, if you are an operator and you're doing this the way it should be done and the way it can be done, you're going to thrive. And that's solid. I mean, I know you guys have mentioned Jim Rohn before. Back in pre-06, I was listening to his cassette tapes in my truck. I mean, that was back when I was really starting to get a handle on, you need to get out of personal debt. Just get out of there. And then it clears up so many different things. So it's nice. I think you guys, you're not much younger than me. You guys are right in that cusp of that 80, 90 corporate mentality. And you just were able to see it from almost the outside, and create what you created. And you guys are legacy. You guys are legacy builders, man. I know you are. And I know your families are damn glad to have you doing what it is that you do. Cause you guys are like in 30 years, call their office. Somebody's going to answer the phone. They're still going to be in business. They're still going to be doing deals.
We love to hear that. And that is absolutely the plan.
Yeah, absolutely. Listen, I'm not going to keep you. Let me ask you just a couple of really silly questions on the end here.
Sure.
You answered one of them inadvertently. This is just an office thing. During the vetting of the borrower, when they're ready to move forward, we're still in the verbal stage. You got the assets. I got the assets. Numbers, working out. The valuation payment, the credit card part, and I get that part, get that information over the phone. Don't even send them a link. Do you guys use any particular service? Because I don't have a merchant account. And you've explained how big of a nightmare that is.
PayPal.
Yeah, I was thinking that, but
or Venmo.
Way to go.
Or Venmo.
Oh, true. Okay. Venmo is a great option these days.
I've been hearing a lot about Venmo. I got a couple coworkers that send money back and forth to their kids and stuff like that. So
Venmo or PayPal. And I mean, listen, depends on who it is. You can, if you don't want to be, if you feel like they're the personality type that too rough and intruding is going to push them away, send them a link. But a lot of the times it's like, oh, you cool. Based on this, you ready to go? We're used to moving really, really quick. I can just take a credit card over, from you over the phone, and you can just type it into PayPal on their behalf. Or, Venmo, the funds, it's going to go to, our appraiser or our inspector or evaluator or however you want to call it. And I can make sure he can get out there in the next day or two.
Got it.
So you just kind of work it into your script.
Got it. I won't keep you. I really appreciate you taking time, and the technical stuff I know is a pain in the neck. I take for granted that a lot of people aren't as tech savvy. I was on Windows 98 in 1998. That's when I started using a computer on a daily basis. So I appreciate that you guys have somebody there, at least a team of some people that help you through that piece. Because a lot of people, I don't think they harness the power of what's out there in the space, the technology.
Makes your life easier.
Oh my God. Constant contact. It's like 500 contacts or less is less than $20. I'm like, I'm all over that. I mean, how could you not do that? So anyway, you guys are great. Just keep rolling, man. I'm in the mastermind and look forward to the next coaching call. And this feedback I can't even imagine getting into this space and not having access to the knowledge you guys drop. It take years of mistakes to figure this stuff out.
That's what it took us. Long time to figure it out.
A lot of trial and error.
Hard way. I mean, we were calling other private. We were calling a lot of other private lenders to just ask them, "Hey, what would you do in this particular case?" And you learn from that, and then you just learn from doing deals. And that at some point you kind of have to get your feet dirty and just do it.
Absolutely.
So, all right, Greg. Well, we appreciate it.
Absolutely. You guys
Thanks
have a
for
great
taking the
day.
time.
All right, thanks.
Likewise. Take care, buddy.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you'd enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.